And we should be live. Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you here for another special live stream with our good friend, Andy Schectman. His firm, Miles Franklin, is the officially endorsed precious metals solutions provider by Thoughtful Money. Andy's been joining us a lot recently. I had told him I was hoping to give him a bit of a break, but the action just hasn't let up in the silver market. So anyways, first, Andy, thanks so much for joining us.
Always a pleasure, Adam. Glad to be here.
Folks, it is an incredible busy time for Andy. So the fact that he's willing to drop everything when I ask him to and come on here is a real privilege for us. All right, Andy. Well, look, every time we talk about the potential for the precious metals going higher, despite how far and how fast they've moved. And the last time I talked to you, I asked you, is it time to sell, especially silver? And your answer was no. And that has proven so far, at least, to be a prescient answer because the precious metals continue going higher. The day we're talking right now, silver is at $93 an ounce. And Andy, I remember when silver was in the high 60s or low 70s, I said, you know what, $70, 60-something dollar silver makes Wall Street start to think about $75 an ounce silver. And then $75 an ounce silver starts to make Wall Street think about $100 an ounce silver. And that's the way it's been playing out. It seems like that magnetic tractor beam of the big round number is starting to really pull hard on silver. Same thing's going on with gold. Gold's had actually a really nice run since we've talked. The day we're talking here, it's somewhere over $4,800 an ounce. That theoretical $5,000 an ounce target does not seem so theoretical anymore. Again, another really big round number with the tractor beam pulling the price and people's psychology. So, Andy, I had to title this live stream before, obviously, we shot it. And the question I put in the title was, okay, let's say we hit those big round numbers, $100 an ounce silver, $5,000 an ounce gold. In your mind, what should folks think about doing at those milestones? Is that, my God, we got here so much faster than we thought, sell, consider yourself lucky? Or are you seeing such momentum still in the system? You think this whole rising tide is going to continue going higher from here?
I think the first thing you have to understand, Adam, is that gold and silver really forever have not been allowed to reach real price discovery.
True price discovery.
Yeah, and where is it really? I think if you want to know the real story, watch the delivery behavior. And, a standard Comex contract is 5,000 ounces, right? And what we saw in December was the largest delivery in the history of the Comex market for the month of December, 68 million ounces. Now, a mint box of Silver Eagles weighs 500 pounds, or 500 ounces weigh 42 pounds. Who just bought? Actually, it was 64,730,000 ounces were delivered in December, the largest ever in the history of the Comex. And January, which is not a scheduled delivery month, we've already seen close to 40 million ounces of silver delivered, maybe more. Last I checked, 110 million ounces in the last 40 days. And there's not a word about it, or 5 or 6 million ounces of gold along the way with that. Not a word about it. And that's what we have been seeing for the last 15 months, every single month. Not a word about it. I scream about it. The mainstream media, these jokers who actually think that they are doing right by the public, don't speak about the fact that gold and silver have eviscerated the S&P in the midst of the greatest tech boom in history, and even more relevant than the performance, which has been amazing, is the deliveries. Now, the deliveries to me say everything. The deliveries are being done by the most well-informed and well-funded traders on the planet, period. Now, I've been for 5 years saying it's been the central banks, and they started the ball rolling. That was crazy enough, and it occupied a part of every one of the 6,000 podcasts I did since 2019. But what you see right now is the most well-informed traders here in the United States. And that's a whole different thing. And delivery at that level should not be ignored. In fact, to me, it's all you need to see. Now, in a market like we see right now, I promised you, and I've said it before, I said it last time we were together, I will tell you when I think it's time to bail.
Right.
But this is not even close to it. The dips that we see right now, in my mind, are a gift because they are driven by positioning and leverage, and not by a sudden surplus of metal, period. And I think that the risk is waking up, not that not that silver goes down from 95 to 85, or the gold goes from 4,800 to 4,500 in this big correction. I expect it. I expect a correction, and one is corrections are normal, but the risk to me is not being able to get what you want at any reasonable premium, period. So yes, short-term caution is appropriate. Long-term conviction is also massively appropriate, in my opinion. They should both be able to live together. And look, when you see the Shanghai market in silver pricing above $8, $9, $10 above Western spot and futures, it's basically the market screaming that the metal is worth far more than where it's being financially priced. And when you see the lease rates going way up, the widening spread is a signal of tightness in the market. And it's not a rounding error that we continue to see. The raising of margins. That's what in 2011, they jacked the margin rates up so high, it flushed everyone out. This time, they raised margin by 30% the day after Christmas, from 21,000 to 27,000 in your margin account to control one 5,000-ounce silver contract. Shook all the people out that were using margin and needed to sell to cover these margin requests or demands. And if you didn't pay it up by the end of the day, then you get a margin call. Well, what happened? Normally in 2011, and normally that kneecaps the market. These people that are standing for delivery for 100 million ounces in 40 days, do you think they're using margin? No, they're not. This is the highest level of high. These are central banks, commercial banks, Tesla, Samsung, you name it. Tesla and Samsung would be poor compared to the people that are standing for delivery at this level. These are sovereign nations. This is the US government. This is repricing in an asset that has never been allowed to find real price discovery. And I do believe that. And I think when you use technical analysis in a rigged market, it's invalid.
Mm-hmm.
And I think what you see here is a microcosm of what I expect to see. Part of the way that these banks have been able to save themselves is through rhetoric. You never see the media talking about it, right? Never. And that's always bothered me, but it is what it is. But the rhetoric is, very important. So TD Bank, right? There's this rumor that Tom Luongo has that, and I think he's someone worth interviewing. He's a very smart man, and his theory is that Trump said it today in Davos. He said, the election in 2020 was rigged and people are going to get prosecuted. He said, I probably shouldn't have said that. That's breaking news, but it's coming out.
Yeah, I heard that.
And so Luongo's theory is that he believes it was the European aristocrats, and the way you get them is to blow up the positions on the LBMA. In essence, that's part of what he thinks, because the Economic Times says the 5 U.S. banks that were short have flip-flopped and gone long. No, that's what the Economic Times says. JP Morgan covered a 200 million ounce short position, they say, and have been buying millions and millions of ounces of physical. And that the 5 banks of the 8 Western banks that were short all of these years collusively going back and forth to hold the price of gold and silver down, the U.S. banks are now long, exposing the short banks. So TD Bank, I'm going to read to you what TD Bank did in Canada. They came out 2 weeks ago and said, we enter short spot silver anticipating a dramatic reversal in prices as silver's devilish blow off top comes to completion. TD Securities entered a short position in silver futures in early January 2026, betting the price would fall towards $40 an ounce. They placed a stop loss around $92 an ounce to limit losses as the price went the other way. And guess what? They just got stopped out on Friday. They're $92 an ounce. They were hoping that they could engineer this, and it's not working anymore. And I think you see a repricing of gold and silver that has even yet to even begin to find equilibrium with where it should be. So yeah, I'm not a perma bull, but I do believe that this is just beginning. I do believe that.
Okay, so many questions that came out of that. Let me bang through a couple things. First off, you talked about the premium on the Shanghai exchange, somewhere around $10 an ounce. Can you explain to folks exactly like why the imbalance there? How come there's not an arbitrage that closes that?
That's what they're trying. They keep keeping it there to arbitrage it instead of closing it. In other words, the traders who have the ability to buy paper in the West and deliver physical in China are doing so. You trade it, you give them a million ounces, you just made 8, 10, 12 million dollars. Give them 20 million ounces, you made what? A lot. You make $200 million, easy peasy.
So let me make sure I understand then. You buy paper contracts in the West, you stand for delivery, you get your silver at whatever the current spot price is in the West, let's say $93. You then take that physical and you sell it to a Chinese buyer in China for $10 more?
Yes. I mean, what people don't realize is that there is a Comex contract that delivers in Hong Kong. And it's into a Comex facility. So you can deliver Comex contracts, what's called exchange for physical, where you actually deliver the physical in Hong Kong. It's then picked up by a truck and driven to the Shanghai Metals Exchange.
Wow, so you don't even have shipping costs from the West over there. You just pick it up in Hong Kong.
Yes, or sometimes they have to ship it there. But the bottom line is that there is a Comex contract that does deliver in Hong Kong, part of the Comex ecosystem. Would have been probably a Brinks facility. I'm not sure which one it is, but yes, and that's exactly how they do it. So they buy the paper in the West and deliver it in China. And so you end up exchanging for physical, making a huge arbitrage. But and they keep doing it to do that sucking sound you hear in the distance. That's them trying to entice. Yeah, keep giving it to us, please. We'll take it. We'll take it. We'll take it. That's what they're doing because they're using this huge trade imbalance that we've given them, the surplus of dollars, to buy up things like silver. So you keep that price higher and you entice those traders who can do it to deliver the metal there. That's exactly what they're doing.
Okay. So let me ask you this. So you said we're seeing record delivery globally. You think it's sovereign players that are hoovering this up. You just explained how China wants to get its hands on every bit of ounce it can because it can make an immediate 10% per ounce pop on it. At current rates, at current flows, current monthly volumes of silver kind of being taken out of the exchanges. Do we have kind of a projected timeline of like, wow, if this keeps continuing, will it drain the LBMA? Will it eventually drain the Comex?
Well, yeah, I mean, listen to what David Jensen says. He's the expert on the LBMA. He will tell you that there's 700 or 800 million ounces of silver in the LBMA, of which the majority belongs to the ETFs like SLV, storage programs like Bullion Vault that store it there. That's not for sale.
Right.
He will tell you they say there's a 140 million ounce float, which he disputes and says, I don't know if that's really free float. Difference between a float and a free float. The float meaning, or the free float meaning the bars standing behind the contract. So he will tell you there's 2 billion ounces of paper contracts outstanding against a 140 million ounce float. Now, what could possibly go wrong? And that's why they went to T plus 8 weeks for most of last year. What do you mean? It's a T plus 1 day settlement. Well, we don't have enough in the way of manpower and trucks, the Bank of England says. So you have to wait 8 weeks to get your bars. Really? That sounds to me like you got caught with your hands in the cookie jar.
Yeah.
And that's exactly what is happening. Now, the part that I think most analysts have a hard time dealing with is the fact that we live in a world of instant gratification here in the United States. And, look at how fast things have moved in terms of, is it a new world? I was talking about this and to someone else. My wife was next to me the other day. She said, but it's different now. The world is different. No, it's not. Richard Russell used to tell me, who was one of the greatest human beings I've ever known in my life, that if you made 7% per year, you will go down in the investing Hall of Fame. But that changed with Apple and Nvidia and Bitcoin and this instant gratification of, 5-fold increase in profit is something that is not sustainable in normal markets. And so I think that people have a hard time understanding that Well, why don't they just buy everything up? Because they would cut off their nose to spite their face and blow up the exchanges and everyone would figure out what they're doing. But if they cut you with a piece of paper over and over and over and over and over and over again, a little cut, little bit, little bit, little bit, little bit, little bit, and now someone, thank God, has woken up in the West, here in the United States. Thank God someone got to this administration and said, we are being paper cut to death. If we do not do this and start becoming massive importers of this stuff, and we'll call it tariffs, it's not tariffs, it's reshoring. If we call it tariffs, they'll believe it, because these banks were all collusive together, the Western banks. Mm-hmm. What, in essence, Luongo is saying is that Trump flipped the script. He's very angry and believes it was the people, the Russian, the European elite, the aristocrats, the old money that was behind all this, that did everything they did to keep him out of office. So we'll flip-flop. There's this massive short position that you guys have, you 5 Western U.S. banks. We're going to say it's tariffs. Don't worry, it's only one way. Well, the bars will come back, just we need to cover. No, we need to reshore. And now we go long. And what happens when there is a failure to deliver? And I've told this story over and over and over again about Bear Stearns and Bart Chilton and his interview on Chris Marcus's podcast and on Andrew Maguire's podcast, where he admits that Bear Stearns largely went bankrupt because silver went to $21. They had the largest short position. And what happened after that with JP Morgan. And the head of the CTFC admits this on these podcasts. No one talks about those things that are mainstream analysts. They just think we're crazy for saying things like this, yet they keep happening. And I keep getting proven right. And I'm not saying I'm a soothsayer or anything. Maybe I'm just stupid enough to say these things in public. And when I'm wrong, I admit it. Or if I say something incorrectly, I admit it to you, to your fellowship and publicly, by email and out here. Yeah, I make mistakes, but I believe what I say, and I say it with respect, right? I think that this administration is making good for the errors of previous administrations by reshoring critical commodities that the rest of the world has figured out long before us and are using the ability to stand for delivery against us because nobody ever did. These countries that had started the ball rolling were never coordinated, motivated, sophisticated, or wealthy enough to stand for delivery. They had no desire to do so, but now they are. And it is the Achilles heel to the entire system. And when Bix Weir used to say that, I'm like, well, how can that be the Achilles heel? It's just the silver market. I don't get it. Think about it. If a bank like Bear Stearns went bankrupt, and if it weren't for JP Morgan taking it over, according to Bart Chilton, the head of the CFTC, well, what if it happens on the other side? What if Bear Stearns has a failure to deliver? And all of the things that Bear Stearns is involved in, equities, Forex, interest rates, you name it, boom, 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 everyone yanks their money out and the contagion blows the whole thing up. Now, could that happen? Yeah, absolutely it can. And to think it can't is stupid. And to play this game of it always being about normalcy bias is, I think, a very big mistake. So yes, this is something that could get really crazy. And I don't even think we've begun to see it because they've never let it get to real price discovery, whether it be the West wanting to hold down silver due to the military industrial complex's need for cheap silver to make weapons to rule the world, or Gibson's paradox, which is the inverse relationship between real interest rates and gold. The West, who ruled the world financially, didn't want gold to go higher when they embarked upon a zero interest rate policy because they offshored all their manufacturing. We got to make people still feel wealthy. How do we do that? Suppress interest rates. Okay, now everyone's wealthy. Their 401k went way up. Their house is an ATM machine because they can refinance it, pay less than they did before, take out money, take a trip to Hawaii, buy four Wave Runners and a new car, and still pay less than they did last year. That's what zero interest rate suppression did. You had to kill the canary in the mine shaft, which was gold. This is what's happening now, largely to the economy, where an economy has been distorted with asset prices that are way out of whack based upon years of suppressed interest rates. What happens if rates rise? This is why they can't let rates rise. And so this is all part and parcel to why the rest of the world does not trust the West anymore, because of what we have done largely militarily, weaponizing the treasury, suppressing interest rates and creating distortions in asset prices. All of these things you could say is a major departure from the moral high ground that we stood upon after World War II. The world now gets it. And they're getting it through standing for delivery. Thank God someone in this country got to this administration and said, we need to do the same thing. Because I will tell you, all you need to know about anything is look at the deliveries every month. The people doing this are the most well-informed people in the world. And whoever it is, and the fact that there's no communication by the mainstream, are standing for hundreds of billions of dollars with the gold and silver, billions every month, and no one says a word. That's all you need to know as to where the trajectory.
Yeah.
That's Michael Oliver. That's momentum. Where's the momentum? Right there. Look at the biggest money in the world doing it right here in our backyard. It'd be nice if the media told us about it.
So another Michael Every, for many, many years was kind of warning the world about a return geopolitically to mercantilism versus globalism. And Michael was a student of history and says, look, mercantilism's kind of been the rule of the game, and this era of globalization that our generation grew up in, he said that's the historical aberrant period, and it's not. He was saying a decade ago it's not going to last, and we're going to go back to mercantilism. I think we're now seeing that in real time here now, and shorthand for understanding mercantilism is just nations become very focused on, hey, me first, rather than holding hands with everybody in kumbaya, and we're going to build this wonderful future where everybody gets along. It's more kind of Game of Thrones, right?
As it should be in this country. I mean, we should take care of our own. You need to bring back manufacturing. You need to have secure borders. You need to do these things. And God bless President Trump for doing it, because the nobility in what I believe he is doing is lost on almost everybody. They don't get it. I see it because I dig into this stuff every single day. He's trying to bring back manufacturing, and if we don't, our kids and our grandchildren are dead. We're broke. Ray Dalio says 60% of the country has a literacy rate under the 6th grade. We're uneducated, we're broke, we're insolvent, we don't make anything. And here comes AI just in time. So all I'm saying is that we have to do this. And if you play it out and see with the Genius Act, with pegging gold to the back end of the bond market, all of this stuff speaks to a devalued dollar, relinquishing the reserve status, the global reserve status, taking care of us, bringing back manufacturing. It all speaks to that. And I could not agree more with what you just said. In fact, I've never heard it said that way. And I'm going to borrow it, and because I think it's genius. Steal
it away. And really, it's all attributable to Michael and others. I'm just the medium repeating it. But so I want to connect that, because it's not just America, right? It's the world. It's now returned to a mercantilist era. A lot of countries like China never actually left the mercantilist world. They were happy to take advantage of us while we were being overly liberal, overly generous. And so I think we've got two things going on here now, right? Where we've got all the countries that are saying, okay, look, I'm not about necessarily playing ball as a global team anymore. They got to take care of my team or my folks. So these are essential minerals, essential metals. I want to do whatever I can to lock up, my access to it, right? So we've kind of got this global scramble for that. At the same time, you said sort of through this process, it's willingly or not, they're moving to an era of price suppression to true price discovery, right? So we've got true price discovery, raising these metals, right? Because you believe they've been suppressed for so long. But at least, I don't know so much about gold, you can comment on this, but certainly for silver, the scramble seems to suggest that scarcity will be an increasing factor going forward, scarcity of supply. One, because countries are now competing for it much more aggressively, but two, as we've talked a little bit about in the past, silver gets harder and harder to find. Right? The pure silver veins have largely all been discovered. It's a byproduct of other types of mining. It's not easy to just flip a switch and get a lot more silver output. So we've got sort of two big trends going on. We've got the price discovery and we've got the scarcity. Am I summarizing similarly kind of the major macro trends that you see here?
Yeah, I mean, look, I think people will start looking for real money again. People will start looking for real money again, and that's a repricing. And I say that like this. I go back to Richard Russell. Money used to be slow, right? You earned it, you saved it, you invested. That's Austrian economics, where you save, you invest, you reinvest. And you did it into things that actually produced value, factories, businesses, etc. But today it seems that money isn't slow anymore. It's fast. It's created instantly. It's pushed into speculation instead of production. All the money that was created after the 2008 financial crash, well, we didn't see inflation because it went into financial assets.
Yeah, we saw financial asset price inflation. Yeah.
Right. And so most of that wealth that people see today didn't come from real growth. It came from financial bubbles and speculation. And that only works as long as trust holds. And I think for a long time, the US or the world absorbed our inflation by holding dollars as reserves. But once the dollar was weaponized against Russia, really, that trust began to break. And then when confidence fades, this privilege that we've had turns into a liability. It's funny because VanEck, which is the mutual fund company, they just came out and they said if the dollar loses reserve status, could gold surpass 39,000? This is by VanEck. I'm just going to read one thing. It says, what if gold replaced the US dollar? Now, I would say, what if gold replaced the US Treasury, which I believe it is, as the reserve standard? And here they put the reserve. So the dollar, you know, you go back to mercantilism, all these countries are using their own currencies, trading over networks that are not compatible with the SWIFT. We're seeing that all throughout the BRICS, right? It's already happening with the SIPs, the cross interbank payment system, and Enbridge, both operational now, trading local currencies and using gold instead of treasuries. But it says, what if gold replaced as a reserve standard? In this paper, our emerging markets bond team values gold by matching central bank money liabilities to gold reserves, implying a $39,000 to $184,000 per ounce price. If using M0 money, which is the foundation of money, it's just the money that's immediately available in currency, for the entire monetary system globally, every dollar of credit, debt, and leverage is ultimately built on top of this, blah, blah, blah. We see gold at $39,000. If we use M2 liabilities divided by gold reserves, $184,000. That's VanEck. That's not James Rickards or me or Mike Maloney. Right? That's VanEck.
How much was the M2 based one?
$184,000.
Oh my God.
M2 liabilities divided by gold reserves is $184,000 per ounce, weighted by daily FX turnover. Using global M2, where we have global series, unlike for M0, we calculate the global price of gold that equalizes M2 is around $100,000 per ounce, weighted by daily FX turnover. The gold price that equalizes M2 is $184,211. That's from VanEck. So I'm just simply saying that these things have never found their price discovery in a world where it was all based on trust. The trust is gone. Our fiscal responsibility is thrown to the wind. And the world is looking for alternatives to a system that had been weaponized against other countries and wonder, is it us next? And it would be very wise to not be reliant upon just that one entity that can make and break you based upon the way that they look at you. And so I don't know. Yeah, I think you're going to see this accelerate in gold as well. Silver is where the real horsepower is. But let's just be honest. I don't really have anything that will illustrate its size, but a D battery that you could hold in the palm of your hands is a tube of gold eagles. It's $100,000 now, basically. When I started, even as recently as when I started doing shows with you, $100,000 in gold would have been closer to 50 ounces, maybe 45 ounces. Now it's closer to 20 ounces. It's accelerating quietly. And that's the thing is that, people.
That's a good way to say it, though, it's a little big, but I could basically conceal $100,000 in my hand with gold.
And that with silver, it used, when I started doing these with you, would have been probably about 1,500 ounces minimum, maybe even closer to 2,000 in silver. Now it's 1,000 ounces is $100,000. And so it's accelerating, and you don't get any media coverage of this. The public is being left out by design. They don't want to be crowded out of their trade, and when there's a fine line between conspiracy and reality. I talk about the Bart Chilton. Here's another one people should watch, and that is Bick Sweer. His YouTube channel is Road to Root, a wonderful, wonderful man. Love the guy. And he did a 3-part series 2 years ago with a man named Jack Sermon. Jack Sermon is and has been since the beginning of the mint the guy that runs the Silver Eagle program. He said 2 years ago that his superiors came to him, which would have been Janet Yellen, and said, make the smallest number of eagles you can make without creating a global backlash. Why do you think Silver Eagle premiums during the pandemic were up to $16 everywhere around the world? Why? I would have paid you 11, 12, 13 over spot for as many as you would sell me. Why? He says that the primary distributors came to him and said, we'll take 36,000, we only gave him 12, or 36 million, we only gave him 12 million. What he is basically saying is that he was told to limit production and distribution of Silver Eagles, yet the law that is in place since the day the mint was developed in 1986 says that they are by law required to produce as many Silver Eagles as are demanded. And he comes on his show, Jack Sermon, the guy that runs the Eagle program, 3-part interview with Bix. Yeah, I was told not to do that. I almost fell off my chair. So when you talk about conspiracy, reality, where this is going, where the people in power have an idea where this is going, a lot higher than I think the mainstream or your financial advisor will tell you. And it's about time Wall Street and the financial advisors admit they were just flat out wrong. They've been wrong, and yet they still can't do it. It's the devilish blow off top. They ignore fundamentals, they ignore reality, they ignore lease rates, they ignore backwardation, they ignore arbitrage, they ignore all of this stuff. And anybody stupid enough to short a market in backwardation gets what they deserve, like TD Bank. And that's where we're at right now. I think it's in the midst of repricing globally.
Can you just real quick, since you used the word, define backwardation for folks?
Sure. So a normal market works in what's called contango, where the current price that you buy right now today, call it spot, is less than the futures price. Why? The futures price would imply interest and storage and the cost of money, right? So if you're going to buy it out,
risk,
yes,
right? You might not deliver it to me in a month. Yeah,
right. It's risk, it's interest, it's storage, cost of money. Backwardation says, because of what you just said, I think the risk of you not giving it to me is greater than, I'll pay more for it right now, thanks.
Right.
And so if you're going to pay more for it right now than you will out into the future, anyone who's stupid enough to short it right now gets what they deserve. And that's what you saw with TD Bank. And see, this is a thing, is that in the West, we have a very hard time believing that this could actually happen, that we've actually been beaten at our own game of metal suppression by these countries that were third world most of our lives, that are now sophisticated and say, you want to play a game where you suppress the world's commodities that we're the ones that produce more than you and use more than you and appreciate and have a history of it more than you. Great. We have more money than you ever thought we had, thanks to the trade imbalances you've given us. We're going to stand for delivery. And when that happens, the paper game breaks. It's Bernie Madoff. Everyone was thrilled making their monthly checks, right? Until someone said, I need my money back, though. The principal, okay, I need it too. I need it too. I need it too. And then Houston, we got a problem.
All right. Yeah, while you were talking there, I just put up this cartoon that Axel Merck had created, 12 years ago, 13 years ago.
Yes.
Very prescient. But yeah, to your point, we got more money, and a lot of it's, we got your dollars over here, so we're just going to send them back to you for the metals. And
that's right.
The metals start piling up in our country, and the dollars start piling back up in your country. Who's really winning?
Yeah, that should have been titled foreshadowing, and it should have been, and no one would have believed it. It was just a cute thing then, but now it's reality. That's the arbitrage. That is them saying, sure, yeah, we'll give you lots of money. Go ahead and send it over here. We'll even pay you a whole lot more than you can get it for in the West. Thank you. That's exactly what that arbitrage is right there.
Okay. So let me ask you this. So if the world is developing a newfound appreciation for the value of these metals, this might be asking you to speculate a bit, but do you see an element in what the U.S. has done recently with Venezuela and now with Greenland? There are lots of reasons for why it did what it did, many of which probably you and I will never be party to, Andy. But do you think access to more precious metal supply is a part of either or both stories?
Well, I don't know if it's precious metals or just strategic metals, and even Trump talked about it today. He said it's a giant piece of ice. It's not about the rare earths. He even said that, but it is. It is, and yes, of course, this is about national security. You know, there's
Right.
that.
But,
There are
but
those.
Venezuela has one of the largest gold reserves around, I think. I don't know what the deal is with Greenland, but I got to think large landmass, totally untapped. There's probably some precious metals in there
Of
somewhere.
course, it is. It's precious metals. It's rare earths, of
It's a
course.
bunch of other stuff too. Yeah.
Yes, it is, and I think there is a new realization that these things are critical. We lived in a world where paper and debt from bonds and stocks were all that you needed. But if you ever there's that game that you can play on your phone that's been around forever. It's like I don't know what it's called. You build a world and you start with sticks and stones, and by the end of it you're flying in spaceships. But in every respect, it's about accumulating things that you need to build an advanced civilization. And that's where the West has ruled the roost for so long, they never had to compete with the rest of the world. And when you and I were kids, China and India, these were third world countries.
Yeah, they were largely backwaters. Yeah.
Now they're not. And now they're very sophisticated and very wealthy. And they say, ha, it's not about the paper. It's about the real things. And they're doing it. And that's the realization that is happening. And you look at 1980, two brothers trying to corner the silver market. You look at 2011, leverage and speculation. Those are easily defeated by raising margins or changing the rules on the Comex. When it is sovereign nations saying, let's go, giddy up, go get it, buy it everywhere you can or else. Well, you can't say that out loud because the world is globalized and connected so much with communication that bang, 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 you get traded out of you get stopped out because everyone goes to get it. But if you quietly say, if we don't do this, our future generations are in big trouble. You have nations now fighting for a limited supply of critical assets that are needed to build a advanced civilization, period. And it should have been realized a long time ago. But that's where we're at. And I think that's the difference between previous cycles. And the West controlled the price forever.
Right. And that's why you don't think, even though it looks similar to the price blow-offs we saw in 2011 and 1980, that's why you think it's different this time, because the dynamics driving it.
Yeah, because you didn't have the sovereign nations standing in as challenging you for this quietly and through sovereign wealth funds and whatnot. It was speculation and leverage or two brothers. Ain't the case anymore. This is a whole different ball of wax, and that's why the people who rely on recency and normalcy bias will get blown away by this and won't notice it at all. And over the last month, Adam, I've talked to so many people, many of your people, who say something like this to me. Gosh darn it, for 3, 4, 5 months, I wanted to buy this stuff, and my advisor said I'm stupid to do so and don't do it. And what do you know? Here we are. And so the people giving advice, when you try and figure out where we're at, I mean, I'm using a lot of fact and a lot of intuition and supposition to figure out where the end game is, but fact-based, I think you have to separate yourself from where we once were and look at this as a whole new thing and realize we're in uncharted waters. That anyone's giving you advice is doing so based upon what used to be and what used to work. But my argument here is that those things are now becoming less and less and less relevant until they become irrelevant. And you have to use your gut. And I would say this to all of you out there. The key thing, if you are relying upon an advisor who doesn't look at the world the way that you do, is it the right advisor? Adam has all these advisors working in conjunction with what he's doing who understand the world maybe the way that you do. Wouldn't it be more appropriate to shift to an advisor, perhaps, even though he or she has done great for you up until now? Isn't it maybe better to interview an advisor who might look at the world through a similar lens? Because to me, that's what is going to dictate performance on your wealth moving forward, is the global macro view as things begin to change in a massive way. That to me is what people are struggling with. And, not to plug your service, which of course I am, but I mean it, because if you're going to get advice from someone, you might as well get advice from someone who has a similar outlook on the future and the way the world is, rather than someone who's been buried in a line of learning more and more about less and less till they're experts on nothing, thinking that the only way to retire is through a 60-40 allocation. I have an account at Morgan Stanley. Very good friend of mine runs $4 billion worth of money. One of the biggest advisors in the southern part of the United States in Morgan Stanley. And he wouldn't know a gold coin if it fell on his foot, yet their chief investment officer said sell half of your bonds, that the 60-40 model doesn't work anymore. So 40 of that 40% in bonds, sell half and put it in gold. So things are changing, and even the sophisticated people aren't aware of it yet, but you guys are. Think about that.
Well, first off, preach, brother. And yeah, I was sort of smiling as you were talking there, because I could just imagine the guys at New Harbor Financial sending you the biggest gift basket that they could think.
Yeah.
I feel exactly like you, and it's why I started Thoughtful Money and created the model the way that it is. And I will tell you, it's a challenge to find financial advisors who appreciate the role of precious metals. One, just from a like-minded macro sense, right? These guys are kind of, you usually find one of two people who are, just inundated in the way it's been done, and they're just using the old playbook. But also, a lot of these guys just look at precious metals and say, well, look, I don't make a commission, or I don't make any revenue off of owning that. So why do I want to recommend that to my clientele? A lot of the advisors that Thoughtful Money endorses, especially the guys at New Harbor, they oftentimes will say, look, we don't even want you to come on as a client until you have some foundational exposure to the precious metals. We think like that and paying down excess debt, those are things you need to do to get your house in order before we should be taking over the rest of your capital, right? But guys like that are hard to find.
Yeah, I think I need to open an account with them myself, because they are hard to find. And, I've had a really good relationship with Rick Rule for a very long time. I consider him a dear friend, and he's done more for me than almost anyone I've ever known in this industry. And when he was the CEO of Sprott, to this day, I do business with all their brokers. And by the way, as a financial advisor, you are able to do that if you disclose it. It is not selling away. And their brokers write business through me. And I will tell people when they call, who can I get as a financial advisor? Now I tell them to search you, because I would always say Sprott, but the pushback would be, but aren't they just, mining and natural resources?
Yeah.
And I said, yeah, they are. Well, a lot of people want something more well-rounded. So I say, look at Adam's program. And
thank you.
But it's true. It really is true that you need to, if you're going to work your butt off for your entire life, and then instead of taking the responsibility for doing it yourself, you're going to give it to someone to manage your money. At least give it to someone who has a similar view of the world right now the way you do, because, years ago it wouldn't have mattered. The West was the West, and everything was great, and it was prosperity till the end of days. You might have to reevaluate those, even the best laid plans now. And I think that's a good way to do it, is to call one of these advisors and interview them and see if just what they say about their world opinion is different from the way that you're getting it. A lot of the people I talk to, they're afraid and embarrassed, and they get beaten up by their advisors and their ideas, and they forget it's their money. And
yeah, exactly. Well, and especially around precious metals, I can't tell you, Andy, how many people, when I talk to them, say, I've just been asking my broker if we should be adding any gold to the portfolio, and he looks at me and says, "What are you, crazy?
Right.
Are you?"
And they belittle you. That's right.
Yeah.
And they should just admit we were wrong. Like, remember Happy Days, Fonzie? I was wrong.
Yeah, he couldn't
say I was wrong. Well, that's them. They can't say they're wrong. And yet they continue to stand upon that same hill and do the exact same thing, and I don't know, sometimes things change. Nothing stays static forever, including empires. And we're pivoting, we're changing. Now, maybe the US can still be the greatest country in the world, but it has to change. And that's what's happening. And to follow the same playbook may not be the best idea.
All right. Well, look, we'll move on to some other questions. We'll get off the commercial for Thoughtful Money's advisor services. But Andy, I do very much appreciate you bringing that up. And I know you're speaking from the heart. Folks, you hear me say this all the time, but if you want to talk to one of those advisors, obviously just fill out the very short form there at Thoughtful Money. All right. So I want to ask you about Rick in just a moment, because he very publicly, I haven't watched the podcasts, but I've seen the headlines. He very publicly appears to have sold a pretty sizable chunk of his silver position and some of his miners. I'd like to just get any thoughts you have on that. Before we do that, though, so we were talking about how, you know, the sovereign nations are now saying, okay, look, silver is a lot more strategic than we were treating it, and we're going to start making sure that we build up our strategic reserves of it as much as we can, both silver and gold, precious metals. Presumably, in this new world, I'm guessing you think what's good for the goose is good for the gander, meaning at the individual level, we should be building our own strategic reserves of it, right? And yes, it's a wealth building vehicle. There's still maybe a lot of room to run in terms of how far the true price discovery might go. But I also think, Andy, you probably think it's really wise to own it too, just from a, you know, we don't know what's going to happen with fiat currencies over time and things like that. And having your own physical hard assets that you control is going to be a big part of just sort of financial resilience going forward. So I'm going to ask you a question that's a little bit hard to answer specifically, but I just want to get your thoughts on it, which is, in your mind, for an individual, what's kind of like critical mass of where you're like, okay, you want to try to at least get X amount of ounces under your belt to become, you know, hit first stage of financial resilience. To give you an example, owning 2 ounces of silver isn't going to do it, right? So if you were advising kind of a regular person who was saying, look, I don't own this, or I only own a little bit, what kind of milestones would you encourage them to aspire to?
I guess it all depends upon what their wealth is. You know, for years, financial advisors would acquiesce to 5%, maybe 10. Well, like I said, you had the chief investment officer of Morgan Stanley say it should be 60, 20, 20. 60% stock, 20% bond, 20% gold. Michael Hartnett, the chief analyst for Bank of America, says no, it should be 25% stock, 25% bond, 25% short-term treasury, 25% gold. Jeffrey Gundlach, the bond king, says 25% metals is not overweight at all. I guess it's what it means to you in terms of a percentage. 2 ounces of silver for a 9-year-old might be an awful lot. It could be that's huge. But if you are someone who is working, you should be able to put a couple ounces of silver away every couple of weeks, like I've done for 36 years. It was the greatest gift I've ever been given in my life. My father told me he'd fire me if I didn't buy something every 2 weeks when we started this company 36 years ago.
Light a candle to your dad for that. That was fantastic.
But it's true, the power of compounding, the power of paying yourself first. So what is the magic number? I don't know that there is a magic number other than to say, you know, it should be a weighted percentage of your assets. And I honestly would tell you, look, I'll answer it this way. My company started as a representative of the Swiss insurance industry. That's where we started. We represented a company, still do to this day, called BFI Consulting in Zurich. We realized the same person that bought Swiss francs bought gold. But I spent my first 2 summers learning in Zurich. I spent 2 summers in Zurich learning the business, became very tight friends with a lot of people there, including Swiss bankers. I spent time at Marquis Baumann and got to know, this is a private old bank. I got to know the guys running it at UBS, Credit Suisse, at the insurance companies. And there wasn't a Swiss banker or head of insurance company that I ever met that wouldn't say to you, in the worst of times, or the best of times, you should have a minimum of 10% of your assets in gold and silver, minimum, in the best of times. Well, are these the best of times?
Right.
And if they're not, where does that number go? Well, you got chief investment officer of one of the biggest banks on the planet saying minimum of 20%, and the chief analyst of the other biggest bank saying 25%. I wonder what they really believe. To me, It's just a function of how much you have. And let's just simply say a minimum of 25% of your assets right now in a period of accelerating dollar debasement should be in metals. And if I really told you what I believed, you'd probably never have me on your show again because I'm the wrong person to ask. Look, I own one of the largest metals companies in America, and I'm pretty damn close to 100% invested in gold and silver. I have a managed account with Sprott. I have an account at Morgan Stanley, and I acquiesced to it out of my wife's demand. And I have some short-term treasuries through them. And I told them, don't even think about putting me in anything speculative. I have some infrastructure things that with, building up roads and bridges and stuff that is a bond that's backed by the U.S. government. I don't like any of it. So, but that's me. I'm the wrong person to ask. I just simply think we are at a period of time where things need to be reevaluated, that the old strategies might not work the way they used to. And the funny thing about it is that everyone would have called me an idiot for being this way for the last 20 years. And guess who came out ahead of everybody? Me.
Yeah.
Because, and I'm not saying I'm a genius or look, to me, it's almost like an innate understanding and it's spiritual to me. I've just known that I should do this. I can't explain it. I've just known, and I've always slept well at night, even though I missed out on a lot of stuff, all these booms in the Mag 7, I missed out on it. Fine. But, when my wife and I got together in 2002, gold was $252 and silver was $5 maybe. So, it's the tortoise, not the hare. My wife says that's the reason the price went up is because she got with me. But the point of it is that in a very short period of time, in under 25 years, silver has gone up from $4 or $5 to 90, right? And gold has gone up from 252 to almost 5,000. So who's been right? Who's been wrong? Have the financial advisors been right? Maybe this is why central banks own it, and maybe why they're rushing to get it. Maybe I was lucky. I don't know. All I can simply tell you is that you should have enough to make you sleep well at night, whatever that is for you. And I've always slept like a baby, even when everyone told me I was an idiot. Trust your gut. And, you're responsible for all the decisions you make your whole life, from the time you're a little kid until you're dead. Every decision you make, you're accountable for, right or wrong. Well, why do we allow people to dictate what we do with our finances when we spend our whole life accumulating them, working? And I think take some accountability and figure it out. But to me, 25% would be the baseline. And I honestly, if we were having a scotch right now, just you and I, those numbers would be much higher.
Okay. Well, I get it. And you're definitely a man who is passionate about his trade in this craft. And I'm thinking of, I think it was Andrew Carnegie, who, there's a saying, don't put all your eggs in one basket, diversify. And Carnegie was like, no. I put all my eggs in one basket and I watch that basket really carefully.
Well,
and
I would like to answer that real quick, if I may. I don't mean to interrupt you, but Richard Russell was my mentor. And in a conversation with him, he said to me something akin to diversification was invented out of fiduciary responsibility by financial advisories. The key to investing, he always said, the primary trend. Follow the primary trend, the way the river flows. Mm-hmm. The primary trend to me is of a debasing dollar. So if you want to be broadly diversified, you do not broadly diversified into stocks, bonds, real estate, and commodities, because they're all inversely correlated to a spike in interest rates, and they're all dollar-based. Instead, you look at the way the river flows, a debasing dollar. Okay, so you buy gold, silver, platinum, you buy mining shares, you buy agricultural ETFs or ag land, you buy oil and gas, you buy anything that you can buy that is opposite the dollar and broadly diversify within it. Now you're broadly diversified within the primary trend. And I would say that that is similar to what I do. There may come a time where the trend changes, and that's when you pivot and move from an overvalued asset to an undervalued asset. But right now, we're nowhere near overvalued because those values have never found price discovery. So you're right. I think Andrew Carnegie was right. Diversity is the best way to become average, the best of the worst of the worst of the best, because asset classes don't always move in harmony. But this is how you keep from getting sued if you're a financial advisory telling you what to do. Right. He told me to put all my money in it. No, That's not what we want to do. You want to be broadly diversified. Well, that's financial advisories. And this is what I mean about taking accountability for your own finances.
All right.
Or finding someone who looks at the world the way you do. Sorry.
No, like I said, you're preaching to the choir here. All right, I got a couple other questions I want to get through. I'm looking at the time. Do you got another 10 minutes in you?
I got no time restraints, so I'm good to go as long as you want to go.
Oh, you're a bold man to say that. All right, so first off, just because you mentioned oil and gas, the day we're talking, Andy, natural gas prices are up 22%. Now that's, I think, due to some of the cold weather that's about to hit the Northeast. But that's a whole other area that I think is sort of ripe for potential revaluation as well. The oil and gas industry, it's been suppressed or depressed for so long. But it's just interesting. There's a lot of people making a lot of money today. I'm sure there's some traders that are going to go out on stretchers too. But interesting time for natural resources of the sort that you listed. All right, Andy, I get this question a lot for you, and I'm sure you get it too. And I just want to give you a chance to answer it in the open. Now, the challenge you have of saying anything positive about where the precious metals are going is the criticism of, well, you're just talking your book.
Yep.
Right. You're a guy who sells this stuff, right? And you've explained enough on this channel, Andy, kind of your philosophy and all that. So I'm not going to ask you to rehash all of that. But the question I hear people say, it's a practical one, and I'm just curious to let you answer it any way you like, is, well, Andy, look, if you think the metals are in this great uptrend and they're going to go even higher and whatnot, then why sell? Why are you selling to the public? Why don't you just buy it and hold it and become, fabulously wealthy?
Can I be honest and simply say to you that to me, and I mean no disrespect, okay? But to me, that's, and I know you're just saying things that you.
I'm just the conduit for the question.
I find that to be about as naive as anything I've ever heard in my life. So a guy loves hamburgers and opens up a McDonald's franchise. Why the hell would you do that? Oh, it's like it's a business that when I started in this industry in 1989, nobody bought gold. Right? Maybe your grandfather and the World War II vets, they bought gold. Nobody did. Nobody did. And if we made $14,000 a month in profit, we were great. We were happy. So people look at it now and say that. It's been a business I've been in for 36 years this next month. I've been doing it longer than than anything I've ever done in my life. It's my child. It's who I am.
It's your legacy.
It's my legacy. And I believe in it so much so that for 36 years, I've never missed a 2-week period of buying it for myself. Now I have the good fortune of being able to run a business that sells it. And I think if people walked in my shoes for a minute and walk into a restaurant and people yell Andy Schectman from across the restaurant, or I go to the Sting concert at the Hard Rock and people are screaming, go silver from the blackjack table, or the pit boss comes up to me and says, I watch all your stuff, I would not put my face out here the way that I do, lying to the public. I mean, it's do I have a suicide mission, or do I want my children to grow up in a world where my name is mud? My point to you is that I believe in it in my soul, and I think you can run a business if you have the good fortune. Look, I don't have enough money to buy my inventory. We keep 100 million in inventory going at all times. This is how you build a business and do something you believe in. There's nothing more rewarding than waking up every morning happy to go do this. I've never woken up saying, damn it, man, I got to go to work again. Yeah, sometimes when I want to go play golf or something with my buddies, I live on a golf course. But when I wake up and know I'm coming on your show, I'm psyched. And when I wake up and say, I get to help people, and I go to bed at night, I look in the mirror and say, you know what? I get emails, honest to God, from all over the world, people telling me over the last few years I've changed their lives. I got one the other day that said, you just helped my mother achieve her life goals. And he says, thank you so much. I told her today she's a millionaire. And she's 84 and she's wanted this entire life. That literally make the hair stand up on my arms. And
those are the best. That's the best feedback.
Adam, you understand this. To be able to do something that helped people. Look, you were working, if I'm not mistaken, for Google, where that could have taken you to the stratosphere. Instead, you do this. Aren't you talking your book? No, you're not. You're helping people. Just because I own a precious metals company doesn't mean that I can't try and share with people the way that I look at the world and what it's done for me and what I see it as. So yes, I get it. There's cynicism, and rightfully so. There's a lot of people who aren't legit, who aren't authentic. But by now, all I try to be is authentic on these shows. I'm not as smart as Peter Schiff. He's way smarter than me. I just try to be honest and authentic and research and work hard and do the best I can to share what I believe is happening. And somehow I've been right for a long time. Somehow. And I ask myself, how the hell have I been right? I don't know. I try. Maybe if I have one talent in this industry, it's putting together dots, connecting them, and seeing where they're going. As people look at each individual piece all by themselves, I see a pattern that is coming and growing. And I've said it for 5 years now, and it's happened. Everyone told me I was an idiot when I talked about bricks in 2019 and 2020. What are you talking about? And then all of a sudden, everyone's talking about it. And I just think that the bottom line here is that there's nothing more fulfilling in running a business that you believe into your soul and participate in. The most egregious thing that you could ever do is run a business that you have no part in, right? And like, I just sell it. I don't own the stuff. Instead, I live it and breathe it and tell every one of my employees, if you want to work here, you'll buy every 2 weeks. And every one of them thanks me almost every time I talk to them. God, thank you so much, man. You know, since you told me to do that, and I've been here 3 years, 4 years, it's unbelievable what's happened to my life. Now, I just believe in it. And if you believe in what you do, you can be good at it. In athletics, I wasn't the best player on my team, yet I achieved much higher level than most of the people I went to high school with. And the thing of it is that you love something so much, you don't mind getting up and going to lift weights and getting up and going to be the first one at the baseball field and the last one to leave, and you're psyched about it, and you talk to everyone about it because you love it. Well, I love what I do, and I thank God every day that I do it. And that's the difference. That's why I sell it. And there will come a day where maybe I can't get it. I'm not selling mine. So I don't know. Good question. I get it all the time too. It drives me nuts because it's naive.
Great answer to it might have been a difficult question to field. I also say too, Andy, you're a very humble guy. You are very smart and you're very well informed, especially again in your trade here. It's interesting though. I just want to say this: when it comes to your Thoughtful Money is endorsed precious metals provider. I've got the advisors that I talked about there too. And what it's a very hand-selected process. And what I learned through the years, and it's really influenced who I chose, is you definitely want smart advisors. So absolutely. But it's like, the most successful people in life aren't the smartest. A certain level of intelligence you need, but beyond that, it's really grit that is a big determinant, right? Kind of how hard you work, how persistent you are. And I found that with financial partners, what you want is kind of the financial equivalent of that, which I call stewardship. It's just the getting up every day with, look, I want to do the best thing for the people who are putting their faith in me, right? So you want a smart person, but who's really motivated by that stewardship thing. And obviously, you've got that in spades. That's why I chose Miles Franklin. That's why I've got the advisors over here. So I want to call you out for that, but I also want to, say, hey, Andy, you're a pretty smart guy too. So don't smoke screen yourself too much there. You got a lot of brain power. All right. So I want to ask you. I'm going to ask you about Rick in just a second, his trades. But I want to get your opinion on the miners for a second, Andy. So I'm going to bring up two charts here real quickly. I'm going to bring up mining stocks. The reason why people invest in them is, if you're bullish on the metals, you buy the mining stocks because the mining stocks are a levered play on the metals themselves. You expect the mining stocks to do multiples better than the metal itself. And that is playing out with gold. I think people would say, hey, I kind of expected maybe a greater pop. But if you can see in this chart, and I know it's a little bit hard to see, the yellow line here is GDX, which is the main mining stock ETF. VanEck, by the way, since you mentioned them earlier. And then this green line is the gold price. And you'll see here over the past 12 months, gold's been up about 75%, and the mining stock complex is up about 170 something percent. So it is being a levered play. Again, maybe it could, folks maybe had higher aspirations, but it's still, it's more than 2x what the metal has done. But if you go to silver, if you look at the 1-year comparison between the main silver miner ETF, SIL, and the price of silver, they pretty much had the same return, about 200% over the past 12 months. So the question here is, wow, is the mining complex dramatically undervalued still here, right? I mean, should we be waiting for, should we be expecting here that the mining complex is going to reprice here to become the levered play on the underlying price of silver?
Sure feels that way to me.
What you think about that?
Yeah, sure feels that way to me. And maybe, I mean, there are fewer miners to choose from too. I mean, it's a consolidated.
Right.
There's only a handful of companies that mine silver.
Right. And there are a number of companies in the silver ETF that mine a whole bunch of other things. So it's not just pure silver. Yeah.
Yeah, I think that Keith Neumeyer's First Majestic is the purest silver play out there, and it's only about 60% of what they do. And that's because silver, your skin is epidermis, and silver is found epithermal, right at the top of so the big deposits were found forever ago. The majority of all the silver mining comes from byproduct of lead, copper, and zinc. And they stumble across it. So there's no incentive, price incentive, to start digging for silver when you're mining lead, copper, or zinc. You find it. And that's why, only about 18% of the metal, of the 850 million ounces mined, only about 18% of it, call it 160 or 70 million ounces, came from companies like Keith Neumeyer's. So I think that there is a tremendous upside still, and that chart would pay reference to it, to the silver miners. Absolutely. I think they are undervalued, and there's no reason to not have exposure to them. I think when you look at, to me, when I think of my mining position, I think of a pyramid, that the Swiss model that I've used forever. The base of my pyramid is 60 to 70% of my assets paid for real estate, gold and silver. And I want to say cash, but it's like a melting ice cube, but we'll say cash. Yeah. The middle portion would be 6-month treasuries or less, earning 3, 4, 5%, whatever, or a utility stock paying a dividend. Conservative, low growth, a little bit of return, a little riskier than the base of the pyramid. And the top 10% would be your mining shares if you're into cryptocurrencies, whatever it may be. The theory is you lose everything on the top 10, you make nothing on the middle 30, as long as your base is plodding along like the tortoise. You never go backwards. So in a perfect world, you kill it on the top 10, you do great in the middle, and the bottom doesn't matter. So I think that if you do not invert your pyramid, everyone should have exposure to some silver and gold mining stocks. I think the leverage is fantastic, and you can make more money on that top 10% than you can on the bottom 90. And I think, yeah, I definitely own it. I would own it. And I think silver, especially according to that chart, the miners are wickedly undervalued. And a little bit of cash in it can go a long way.
All right. Okay. So then now we get to the question about Rick. So Rick, super knowledgeable guy. You've already mentioned that, and you know him very well. I have not had a chance to talk to Rick, just FYI, folks. Rick's going to be on the channel next week. Primarily to do a deep dive in the oil and gas space, but I will ask him just for an update on this apparent trade that he's made in selling a good chunk of his. I think he said silver. I think it was silver and silver miners. I don't think it was gold, but we'll clarify that with him. He also said, "Hey, look, this is subject to change at any moment, right? Like I could easily buy right back in." I don't know if you've actually listened to the podcast and got more detail than I, Andy, but what's your general reaction to what Rick's doing here?
Well, First of all, if Rick and I, and again, I don't think there's anyone who is, he's one of the most intelligent people I've ever met in my life. I mean, freakishly intelligent, and articulate. He's almost like Shakespeare, the way he talks, man. And so
I love his way to turn a phrase. Yeah.
it's unbelievable. But I think if we differ in one perspective, it might be the way that we look at suppression of the markets. He might say they've been managed, but ultimately you can't control it. And I might differ a little bit respectively. Okay, with that being said, my take on it is he's been telling people to do this since silver was 15 bucks an ounce, 18 bucks an ounce. And at 18 and 20 bucks an ounce, which would have been 4 or 5 years ago, 18 bucks 4 or 5 years ago, now it's at 95. Well, that's a hell of a gain. He's a trader. I don't think he's selling his physical silver, but he may be moving from something that is appreciated fivefold into something like natural gas, which has been held back. And maybe he's the reason the price of natural gas went way up today, because he put all his money into natural gas. My point is, my guess is, if I had to guess, and I don't know, I will see him next week, as will you, in Vancouver. But my guess is that he... Are you going to the Vancouver Resource Conference?
I am. So
okay,
you're going to be there too?
Yeah. So I'll see you there.
Well,
Jay Martin's conference. Never miss it.
We'll get that, Brandy, and I'll find out what your true percent ownership of precious metals.
Beautiful. Yeah. So I think he's just taking advantage of being right for a long time. Took a while to get there. Taking some of those profits. Rick is the legend of moving and buying things that are undervalued when no one wants them. He'll tell you that's how you make money.
As Jack here said, Rick buys what's hated and cheap, and maybe that's all he's doing is buying.
That is what he's doing. It's exactly what he's doing, and he's the master at it. And he will tell you the biggest money he ever made is when everyone said he was crazy. He talks about one trade that he went all in or bought a lot of it. It lost half of its value, and he doubled his position, and then became extremely wealthy off of it.
Yeah.
But that's how he's. Not only does he have conviction, he has an immense amount of intellect and researches. Now, I don't think he would say to you that the silver run is over, but I think if you're a trader, taking those profits and redeploying them into something different. When you're talking mining shares and ETFs, it's different than holding stash in your house or in a vault. And I think that's what he's doing. He's redeploying it into something that is undervalued, taking a 500% plus gain that he's made and moving it. Now, I don't think he's selling all of it. And I don't think he's selling his physical, but I don't have most people haven't been in it as long as he has. Most people weren't buying shares at pennies like he was, because he bought it when no one wanted it.
Right.
So he's a little bit different. He's kind of a behemoth, right? And I don't think there's anything wrong with it. But I will say the one thing we differ in our perspectives is in perhaps the suppression and the story behind it. And I think that's what allows me to look at things a little bit differently. And I respect his viewpoint. And who's to say who's right or who's wrong? But I would say he's not completely out of it. He's just repositioning to an undervalued asset.
Okay. And folks, Andy and I will be up there in Vancouver with Rick this weekend. So we'll try to get whatever intelligence we can. And then, of course, let you ask questions to Rick when he's on next week. All right, Andy. Well, look, thank you for coming on again and just, again, being so transparent with all of your industry expertise. So you have been very kind over the past couple of months, and the timing couldn't have been better in terms of offering an exclusive offer to the Thoughtful Money audience. This was around silver. Initially, it was the ability to buy junk silver from you for $1 under spot. Given the aggressive CME margin hikes, that is now up to at least at last time $1.35.
No, we're doing it. We were able to secure a little bit more. It's at 99 cents right now. We just
my goodness. So it's now a better deal than last time you were on.
99 cents, and it's fluctuation. And real quick, the reason we've been able to do this, real quick, is that the companies like mine, who are smart enough to say, oh my God, this is just, it's never been like this. I'm buying every single ounce I can find. We have a network of coin shops all around the country. I put a feeler out to every one of them, hundreds of them. Anytime you get junk silver, I'll take it. All of it. Give it to me. I'll buy it all. Why? Why is this happening? The big companies get it. right? The other companies, small, mid-sized dealers, coin shops, they get this stuff in. And as I've told you, it's been for a long time, the public hasn't really been involved in this market. It's been the big traders and the very wealthy people who get it. So they get this junk silver, they pay for it, and it sits on their shelf for too long, and they want to get rid of it. So where do they normally go? They don't call a company like mine. Some do. I have relationships with lots of them. They don't know what to do with it. So they bring it and anything else that they'll take in terms of maybe China or flatware or whatever, and they'll bring it to the refiner. And the refiner takes that in along with maybe doré, or they take in jewelry or flatware or junk silver, all this stuff, and they pay the public for it. So you're a refiner with $30 million. You're not a massive refiner, but you got $30 million worth of silver in process, right? From when you take like silverware, that's sterling. The knife, the blade is stainless steel. The handle is plaster. It's just a little wrapping of around the handle of sterling. There's a lot of labor involved in breaking this stuff apart,
Right.
And so you have to refine it into shot. That could take time to get it into a refinable form. Then you refine it. That's little BBs. Then you take that and you melt it down into bars and rounds. This whole process may take weeks, and in various stages. So these refiners have to hedge their position, right? So I got two remote controls that are the same here. Here's my inventory in the refinery. Here's my short position on Comex, because if I have $30 million in working stages and the price drops by 10 bucks an ounce, I'm dead. I'm out of business. Right. But not so if I sold short. So it's market neutral, right?
Yep.
Well, what happens when A, margins raise, and B, silver goes up 3, 4, 5 bucks a day? You get margin called on your short position. These refiners like, oh my God, we're getting margin called every day. We can't do this. Stop taking new business. Stop. No more new business. That's why it's hard to find bars and rounds right now. And they're not taking any business. So all of a sudden, these dealers are like, what do we do with this stuff? No one's buying it. It's killing us. Well, the big houses, the big primary distributors say, well, we'll pay you $2 back a spot for it. I'm buying everything I can buy, all of it. And I'll sit on it if I have to. I can hedge the metal. There's no premium. We will see a period of time when that premium shoots to the moon again, like we saw during the pandemic. So for those of you wondering, how could we do it? It's because the refiners stopped taking business and the market just said, fine, we'll take it. And I will tell you that I've never seen a better value ever in my life, in my career in silver. We still have it at 99 cents over. I bought a whole bunch of $half. They're 99 cents over on $half. And we'll keep doing it as long as we can until we run out of it. But I think it's a zero risk bet when you're buying stuff that close to spot. What you're buying at the same price or less than a 1,000-ounce bar. I've never seen that before.
Wow. Amazing that that's what's happening in the industry right now. But again, just a lot of appreciation for you making that offer available to the Thoughtful Money audience to let them get in while there's such a low premium on it. Now, obviously, folks, we don't know what's going to happen with the price here. But, since Andy's been offering this, if you took advantage of it, a month or two ago, you've done very, very well given where silver's gone. So anyways, Andy, let me just let folks know if they haven't taken advantage of that offer yet, but thinking they might like to, they can just fill out the very short form here at thoughtfulmoney.com/buygold. And they'll be connected immediately with Andy and his team, and they'll be right in touch with you guys. And of course, they can do that for this specific offer. But if they also have other questions about precious metals, buying, selling, storing, et cetera, you can help them with that too, again, just by folks filling this short form out here.
Appreciate that so much, Adam. I've said it before. It's such an honor. You're such a well-respected person in this industry and a great guy. And I couldn't be more thrilled to have a friendship and an affiliation with your company. We take it really seriously, and I want to thank you and all your listeners out there. And feel free to take advantage of that. And I'm always available for questions. I'm spread pretty thin these days, but I've talked with a lot of your people, and we just appreciate the heck out of it. So
thank you. And as I've said before, the feedback that I get from folks that are dealing with you and your team, Andy, is pretty much universally positive. So thank you for taking such good care of folks.
Oh yeah.
Very selfishly, I am really looking forward to hopefully getting a little bit of social time with you up in Vancouver. So hopefully the next time.
Well, I'll make it happen. Believe me. I have one keynote speech and one panel, and the rest of the time, I'll be walking around looking for someone to fraternize with. So that would be great. I look forward to that as well.
All right. Well, my friend, I can't wait to see you there. Everybody who's watching, please do me a favor, a couple favors. One, please show your appreciation for Andy by doing a couple things. One, hitting that like button, obviously. And if you haven't subscribed to this channel yet, hit the subscribe button below, as well as that little bell icon right next to it. But if you can, especially if you're watching here in the live chat, just let Andy know real quick both your appreciation for him. And again, I've been hitting him a lot on these, but my sense is that even though I'm probably, the audience here probably still wants more Andy.
Mm-hmm.
And if that is true, let me know, because I want to keep delivering on more of the stuff that you guys want.
I should maybe have them send a quick note to my wife as well. Let her know I'm a good guy.
Yeah, I know. I was just at a conference and some people, came up and said some very nice things. And I was like, wow, could you write that down and send it to me?
Yeah, right. Exactly.
But
if they only knew the real you, my wife would say, if they only knew you're a child, she says, you're a child, you're a man-child. Yeah, but I think people who never grow up are actually the people that I want to hang out with. So who wants to grow old? Just stay young at heart.
Oh, very true. And by the way, I think last time we were hopping off, you were rushing off to do a family golf tourney. And
yes.
I remember you were looking to bring the hammer down into.
Oh, of course I did. Absolutely.
Okay,
I got to keep them in place. I mean, my daughter was the captain of her high school golf team. She's a hell of a player, but still can't beat me yet.
Well, you still got to prove who's the alpha, right? Even in the best of scenarios. All right, Andy. Well, look, my friend, again, can't thank you enough. Everybody else, again, thanks for giving your feedback to Andy. Looks like, of course, Andy, we're getting really good feedback here on you. No surprise
Appreciate
at all.
that very much.
Again, can't wait to see you up in Vancouver. But again, just thank you so much for everything you do for the general public in terms of education, but also helping them take steps to improve their financial status, and the fact that you are giving so much of your time and your inventory, your special inventory to this audience. It's just a wonderful friendship and partnership. So thank you.
Likewise, brother. The pleasure is mine. Thank you, everybody. I appreciate it. Look forward to picking up where we left off, and I'll see you next week or later this week, even this weekend. And have a good one, Adam. Thanks for having me back on today.
All right. Thanks so much, Andy, and everybody else. As always, thanks so much for watching.
First started being bullish on gold again. 150% from here would be talking about a $7,000 or $8,000 gold price. I'll tell you this much. If we have $7,000 or $8,000 gold price in the next 12 to 24 months, the world that we are living in, we're probably not going to be going out too much. We're going to have a lot more concerns than we have, because to be driven to that price in that short period of time, there would be some really, really serious issues. We're both coming back. I really like the way they're performing. I think $40 sometime in September is coming. That's a psychological number. Of course, the big number will be 50 and change. But I think the fundamentals for both gold and silver, technically and fundamentally, are firing on all cylinders.
Gold could theoretically climb to $7,000 to $8,000 within the next year or two, but such a rapid surge would signal major global turmoil, bringing far bigger problems than just high prices. On the other hand, silver is showing strong momentum, with $40 likely as the next milestone and $50 being the critical psychological level ahead. Both gold and silver are performing well, with their technical and fundamental drivers aligning stronger than ever, suggesting solid support for further gains. For most of his career, Peter Grandich, a market strategist with more than 4 decades of experience in the financial world, viewed silver as secondary to gold, but earlier this year his outlook changed when silver dipped under $30. Since then, he's become openly bullish on it, even suggesting it could outperform gold going forward, something he never expected to say. Both gold and silver have broken through key resistance levels and are showing strong resilience against intraday sell-offs, bouncing back quickly each time. With silver holding firm, he expects $40 soon, with $50 as the next big psychological level. Importantly, silver's supply and demand dynamics are now stronger than at any other time in his career, making the case for higher prices even more compelling. While silver's past highs, like $50 in the Hunt Brothers era, were distorted by unique events, the more recent $45 level is a better benchmark. Adjusted for inflation, silver's true all-time high hasn't even been reached yet, leaving significant upside potential. Peter Grandich points out that gold and silver miners are thriving, generating record free cash flow and strengthening balance sheets. Wall Street has historically ignored precious metals because they don't align with its financial asset model, but institutional interest is quietly building. As equity growth slows and the stock market peaks, mainstream investors will eventually be forced to take notice, potentially driving a powerful new wave of demand into the metals and mining sector. As we play snippets from the video, kindly click the like button, subscribe to our channel, and enable the notification bell to receive fast alerts whenever we post a new video. I appreciate your support. Have fun watching the video.
Including the blessing that I had for 25 years being at the Vancouver Resource Conferences. Silver was always second on my list. In fact, I used to say it was like kissing your sister. And of course, the silver bugs never liked that. But earlier this year, when it broke under 30, I turned bullish on it to the point where it was unheard of for Peter Grandich to speak gold and silver in the same breath. And that remains so. In fact, I said then that I thought silver could outperform gold going forward. It is both gold and silver, as you and I speak here on this Wednesday. It is just trading picture perfect. It broke through key resistance. It tried to come back. I would say in the last 5 to 7 trading sessions, we've had attacks on both gold and silver intraday, and they can't even keep it down even intraday anymore. And so even as we speak today, it was a lot lower, and as we went to record it, they were both coming back. I really like the way they're performing. I think $40 sometime in September is coming. That's a psychological number. Of course, the big number will be 50 and change. But I think the fundamentals for both gold and silver, technically and fundamentally, are firing on all cylinders. And keep in mind, and I think this is important for silver particularly, the supply and demand scenario is far more favorable now than when it went to $50, several decades ago. So I think the fundamentals are much more underpinning for silver now than any other time in my career. And that's why I would consider myself a silver bug now, something that never existed before this year in my entire career. Far more important. The 50 was in the dinosaur days, even just before I started working in the business. So adjusted for inflation, that'd probably be half that number by now. The 45 wasn't that long ago. I don't think there are these psychological numbers, there's 45 to 50 that people would point to, but realistically, adjusted for inflation, the nominal high for silvers, we're not even close yet. So both it and gold, I think, clearly have 20% at least more in their price upside, and probably a little bit more for silver. What people seem to lose sight of is the gold companies are they're legally printing money in their free cash flow. I mean, it's an amazing phenomenon to see this. Even the ones that were weaker, their balance sheets are so much better and all. And we want to start talking about a couple $100 more on the gold price and maybe, $10 or $20 more on the silver price. What are these guys going to be like? I mean, they're going and the argument is, people say, will Wall Street ever get behind them? This is very important too. Wall Street, since the day I entered, treats gold and silver like kryptonite. It goes against the principles of what they make their living off of, selling financial assets. So don't ever expect to turn on major financial regular networks and hear large-scale speaking about this and all. Look at Newmont. We just said for the year it's been the second best S&P 500. If we did a trace and see how many times it was mentioned on any financial network, you wouldn't even need a calculator. But the ones that were 12th or 15th were spoken about 100 times. When they will come close to having to be involved in it is when the stock market peaks, and maybe goes down, but at least peaks, earnings growth in general equities slows to a crawl or goes in reverse. And suddenly, money managers are going to hear, what's this new back? These guys just went up 30 something, 8 straight quarters of record profit. Get me some. And why I know that's happening, from the institutional people that I can still speak to, especially the companies that go and been putting on and speaking at conferences. That's why these 2 shows in Colorado that are coming up in September are very critical.
Peter Grandich warns that while gold could theoretically surge to $7,000 to $8,000 within 2 years, such a rapid move would likely reflect a severe global crisis. He stresses that investing isn't just about gains, it's about avoiding major losses, which is what separates winners from losers. Even if markets decline, gold and silver are far more likely to hold value compared to stocks and bonds. He recalls advising clients in 2021 to move into physical gold, but only one truly listened, and that person is now far ahead. Bonds, once thought risk-free, have already dropped 30 to 40%, proving even safe havens can fail. For the next 12 to 24 months, Grandich says he would stake everything on gold and silver over traditional assets. Let's move back to the interview.
Let me put it this way. So 13, well over 150% from when I first started being bullish on gold again. 150% from here would be talking about a $7,000 or $8,000 gold price. I'll tell you this much. If we have $7,000 or $8,000 gold price in the next 12 to 24 months, the world that we are living in, we're probably not going to be going out too much. We're going to have a lot more concerns than we have, because to be driven to that price in that short period of time, there would be some really, really serious issues. So in some aspects, I hope we don't get to that level. Okay? But where I think what you have to ask is, it's not, let me just throw 41 years of experience. It's not how much you make, it's how much you don't lose separates the winners from losers. It's very hard for people to understand that. But if you don't lose as much, that means you get to play a lot more, and then you have more chances of success. So what I think is more important to consider here is, what will end up better for me the next 12 or 24 months? Even if somehow they both go down, would one go down a lot less? Yes, gold and silver will outperform stocks. Give me an example. I hate to run on like this, but let me say the terror. So at the end of 2021, I'm part of a planning group. We have over $1 billion under management. We have some serious people with us. A third of my clientele are small business size owners throughout the United States. And I turned to them and I said, man, I think both stocks and bonds can lose money over the next 3 years. And I think it's better to own physical gold. You know how many people listened out of my entire clientele? Besides me, one person. Now, some did a little bit, but one person bit the bullet, got rid of their bonds, got rid of general equities, bought a lot of physical bullion, and now he owns a bunch of junior resource stocks. He never imagined he would own these type of stocks. But the bottom line is, it's inconceivable still for people. How do you lose money in bonds? When we were trained as stockbrokers, I'll never forget the sales manager always saying something like, talking about stocks, but if they're too concerned, buy bonds, because you don't lose money in bonds. Well, do you know that people that went in the long bonds in 20 and 21 into 22, they're still down 30%.
Yeah.
30%. And as much as they can cut interest rates, if I'm correct, and the long bond rates go even higher, they could be down 40%. Now, yes, if they hold long enough and the government's still around and they can pay, yes. But that's unheard of. So I would tell you that as much as it's impossible for people to conceive, I think there's far less risk. If you took my wife or daughter, the two most precious things in my life, and said, Pete, pick either gold, silver, or stocks, or general stocks or bonds, I'm betting their life's on gold and silver, not stocks and bonds.
Peter Grandich's outlook highlights a turning point. Gold and silver are no longer just alternative assets, but essential tools for wealth preservation in a fragile global system. With silver poised for breakout gains and gold offering stability even in crises, both metals present stronger opportunities than traditional markets weighed down by debt and declining confidence. For investors, the real question isn't just how much they might gain, but how much they can avoid losing by positioning wisely now. Do you think institutional investors will accelerate their shift into gold and silver as equity markets slow down? Could silver's supply and demand imbalance make it the most explosive asset of the next bull cycle? If you like the analysis, then share your thoughts in the comments below. We'd love to hear from you. If you found this helpful video, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.
I think now that it's a critical mineral from the USGS, that gives impetus to the validity of silver. And then, of course, who's ahead of the pack? Well, Russia bought silver, whether it was for strategic reserves or for monetary purposes, really is immaterial. It was a purchase of silver for whatever purpose. And so they've kind of spearheaded it along with the Saudis, as you said. So, yeah, we're starting to see it trickle in. What'll be interesting is it's such a small market, you don't need much more buying power to see it really move. It's been behind gold, as we all know. Now seeing 40, people are getting excited. They have a right to get excited. But I'm really looking forward to that 50 mark and see what happens. And we really only been over 50 for very, very short amounts of time.
Silver's proposed addition to the 2025 USGS critical minerals list underscores its growing role in national security and clean energy, with potential policy support, funding, and stockpiling ahead. The U.S. remains heavily import-reliant amid persistent supply deficits, while industrial demand from solar, electronics, and AI surges. With Russia, Saudi Arabia, and others already buying, even modest institutional demand could drive big moves in this thin market. Technicals confirm a breakout. Forecasts point to $40 to $52.50 by 2026, and a push past $50 would mark a historic milestone as silver catches up to gold's rally. David Morgan, often called the Silver Guru, a respected author and analyst, highlights that we're dealing with a massive global issue, rising debt that simply can't be repaid. That's a long-term tailwind for precious metals. Technically, silver has just crossed into rare territory, trading above $40 for the first time in years. But it didn't do so in a parabolic spike. Instead, it stair-stepped higher, forming a solid base along the way. We now have an 80% probability that this is a genuine breakout, not a false move. Complementing that, the gold-to-silver ratio is still elevated, meaning silver could outperform over time. David Morgan points out that gold still needs one more day above its recent all-time high to hit the 3-day confirmation threshold that would trigger another 80% breakout probability. Meanwhile, silver has already led the charge, and mining stocks are confirming the trend with fresh highs. Central banks, hedge funds, and family offices are increasingly shifting away from paper assets into hard assets like metal. Plus, silver was just designated a critical mineral by the U.S. government, and countries like Saudi Arabia and Russia have been scooping it up. Given how thin the silver market is, even modest buying can move the needle, and many see this breakout as only beginning. Please subscribe and like the material if you enjoy it, to receive the latest updates.
You know, we have a very big problem on a global basis, and that's based on this exceedingly growing debt worldwide, and it can't be paid off. So that fundamental just continues. But on a technical side, I mean, silver has not seen a 40 handle for quite some time. And this is new territory, more or less, for silver. And there's a nice base below it. In other words, it didn't just get there in a parabolic move where it just kept going up and up and up and up. And all of a sudden we hit past 40. It's stair-stepped up. So we've seen it, you know, get through that 35, 35.50. I mean, people have different ideas of where the exact resistance line is, but it broke through that. And instead of going right to 40, it built a base at a higher level, and now it's moved up. So we're sitting in a position now where silver, from what I call the Morgan rule, is confirmed. We have an 80%, not 100%, an 80% probability this is a breakout, not a fakeout. Gold actually needs to go one more day above its all-time high, its recent all-time high, which I think is like 3507. Don't quote me, but somewhere in that range. It's above that yesterday and today, and then it should, if it does tomorrow, get those 3 days in a row, which would again give us about an 80% probability that too is a breakout. So it's, I think, a little interesting that silver actually led the breakout the way I measure them. Doesn't mean I don't agree with David. Don't agree with me. I'm just telling you how I do it. But the breakout here in silver is prior to the breakout in gold, again, the way I analyze it. And that kind of reconfirms to me that silver is going to start catching up to gold. We do see the gold silver ratio getting to be a lower and lower number, meaning that silver is outperforming gold, but it's still very high relative to historical standards. So I'm still quite bullish on both the metals, but I do expect silver to continue to have a narrowing gold silver ratio over time. And we may get to what we've already seen in this bull market, which is 30-1. Right now we're above 80. So that implies that from here on out, and I say implies, no guarantees, that silver should do at least twice as well as gold on a percentage basis. Time will tell, but it's hard not to be excited, but I want to stay grounded and not get too overly excited. And the last thing you didn't ask, but pertains, and that's the mining shares. And we've seen, new all-time highs at some of our majors, and we've seen some of the juniors really start to perform. At a month close over 50, we are into a new ball game, a new paradigm. And people that own it, that are long-term strong hands, probably aren't going to sell it at 50. Now, they might lighten up some. I don't know. I don't know people's thinking. But what I do know is that once that occurs, and I believe it will, then what happens? Well, the holders, the strong hands, will hold because they think, wow, how high is it going to go? It's going to get 100. That's what they believe, or 75, or whatever they believe. And that means there's not a lot in the float. Strong hands are holding hard, holding strong. So new buyers, like the industrial side, that has to have it to maintain production of whatever they're making, solar panels, or silver shot, or silver liquids, or silver mesh, or whatever it is. They've got to buy it or they're out of business. So, and then I think the algorithms will kick in because they'll see there's very little upside resistance and very strong hands holding it. So any buying will move it higher. So they'll want to get in early and sell to their compadres that get in later, or maybe a short-term trade, but nonetheless going from 50 to 55 when you're leveraged to the max. That $5 move when you're highly leveraged could be lots of fiat. I don't want to see a parabolic move where silver goes up $1 a day for 12 days in a row and we're at 55.22 and then it collapses back down to 40. I don't want that. I want it to build a base of solidity that continues this market to its ultimate destination, which, believe me, not me or anyone else out there knows what that number is.
The real signal of a market peak comes when mainstream outlets, like a big magazine cover asking, "Do you own gold?" start hyping metals. Until then, most talk is just noise. Morgan predicts that we may still see short parabolic bursts followed by pullbacks, but the long-term trend is intact. For investors, even a small hedge, 5 to 10% in gold or silver, makes sense alongside traditional assets. And while unlikely, unexpected shocks, like a supply failure in silver for solar panels, could suddenly thrust metals into the spotlight. That's why it's important to stay prepared for both steady growth and surprise events. Now let's review the interview.
The signal is when the mainstream, like, a Time magazine, or I wouldn't use the Wall Street Journal, or maybe even Investors Business Daily, which I like much more than a journal, but I would think when you start to see the mainstream talk about, do you own gold on the cover with a question mark, that's usually the sign of a top. But until we see that, you're still in the noise where Oh, gold. Yeah, we heard that. Yeah, okay, it's making a new high, but it took all summer to get this far. Come on. Oh, banks buy it because banks have to buy it. Why would you buy it? Yeah, it's a pet rock. It's done well. You'll keep hearing that kind of noise, and so I'm not too worried about it going to that last phase yet. I think it's a couple years away. Could be wrong. I think you have moments where it becomes parabolic and then backs off. So you get this kind of candles where you get a green one with the line and then it comes back down and settles in. Maybe you'll get a consolidation in a small red candle and then another. But I think we're, again, as I've said 3 times already, in a position where if you don't own metals now, I would buy now. I wouldn't buy everything. If you're really conservative and you got a pretty good portfolio and you're still a big believer in the stock market and the US is going to get stronger and better, I still recommend, maybe 5-10% and buy it now and forget about it. Because if you're only, 95% of your portfolio is real estate, bonds, and stocks, and you're happy with that, you should hedge yourself. Put it in 5% in the gold only. I mean, gold's still overvalued relative to platinum and silver. But is gold overvalued relative to the paper dollar? Don't make me laugh. Not even close. So that is a case to build. And the other one is what else could happen? And I would just venture into this, Danny. We could see where we get something out of left field, like a failure to deliver to a solar panel manufacturer in silver. And all of a sudden that does make it into the news. Or maybe it makes it to social media and it's proven by a reliable source or two. I like to source things at least 3 times. And all of a sudden, my goodness. So there could be an offset. I don't expect that, but I don't rule it out. I try to keep my thinking as objective and as broad as possible. I try to keep it open to all possibilities, even the, let's say, tail end of the curve, where you have to put your hat on, but they still exist. I mean, the tail end of the curve is there and it does happen. I mean, the Black Swan book. I mean, these things do occur. So something like that could all of a sudden shift us from the, noise into that wake up call very quickly. Again, I don't anticipate it, but I don't rule it out. I don't know. I try to stay aware of it. That's why I don't sleep anymore, because the news feed is so quick these days that if you go to sleep, you're going to miss something. I'm joking, of course, but it's a tough market to keep ahead of.
In short, silver's recognition as a critical mineral, its steady breakout, and growing global demand signal the early stages of a powerful long-term move. With debt concerns mounting and institutions quietly reallocating into hard assets, silver may be poised for outsized gains compared to gold. The key is not chasing hype but positioning wisely before mainstream attention arrives. If silver does push past $50, will that trigger a true revaluation of its role as both a monetary and industrial asset? How much longer will central banks and institutions quietly accumulate before the broader public catches on? Please subscribe and like the material if you enjoy it, to receive the latest updates.
Gold's up almost 40%,
yeah.
But gold stocks have more than doubled. So and so people have made a lot more money starting in April, because even the first quarter the gold stocks didn't even move. It started in Q2, but I don't even think gold stocks have caught up to $3,000 gold yet, let alone 3,700, and we could easily be at 4,000 by the end of the year. We're going to get into a stage, maybe next year, with gold well north of 4,000, maybe 5,000. Maybe the gold stocks double again from here. But at some point, they're going to get on the radar of the average portfolio manager, and they're going to start buying. If silver hits 50 when gold's at 4,000, and I think that once silver gets above 50. I think it's going to take off. I think the move from 50 to 100 will be relatively quick.
Gold has climbed nearly 40%, but gold mining stocks have more than doubled since April. Bank raised its 2026 gold price forecast from $3,700 to $4,000, citing strong central bank demand, possible U.S. dollar weakness, and expectations that the Federal Reserve will ease rates. If gold pushes above $4,000 or even $5,000 next year, miners could double again, eventually attracting big institutional investors. On the silver side, once it breaks $50, in the near to medium term, especially if industrial demand and investment flows remain strong, the run to $100 could happen much faster. Peter Schiff is a well-known economist, investor, and outspoken critic of U.S. monetary policy. He recalls that earlier this year, gold mining stocks were so undervalued compared to gold itself that they offered far better upside with minimal downside risk. Goldman Sachs sees gold $4,000 if investors shift more into metal. Their baseline is $3,700 in 2025, $4,000 mid-2026. If there's a big dollar asset exit, gold might go toward $5,000. Jeffries says gold mining stocks have underperformed despite gold's big gains. Many miner valuations still reflect much lower presumed gold prices. Newmont has already doubled this year but still seen as undervalued compared to what gold's price implies. Free cash flow growth, share buybacks, etc., are driving analyst upgrades. Peter believes central banks continue buying aggressively to shed dollars, making gold an increasingly vital reserve asset. As we dive into the video, don't forget to hit the bell icon and subscribe so you don't miss any updates.
$3,000 an ounce for gold when I can buy gold in the ground that's still valued at less than $2,000. In fact, way less than that. I thought that if you looked at what you were paying to buy these gold mining companies, that gold still in the ground had never been so cheap relative to gold above ground. So it wasn't that I didn't think gold was going to keep going up. Mm-hmm. I just thought, why buy it when they're giving away these gold mining stocks and they're so cheap, and the downside I thought was so minimal. It made a lot of sense. And, now I think year to date, gold's up, almost 40%, yeah. But gold stocks have more than doubled. So, and so people have made a lot more money, starting in April, because even the first quarter, the gold stocks didn't even move. It started in Q2, and the whole doubling was basically in the last maybe 6 months. Didn't even take a whole year to double. Yeah. And so, but I don't even think gold stocks have caught up to $3,000 gold yet, let alone $3,700. And we could easily be at $4,000 by the end of the year. So, I'm not telling people to stop buying physical gold and silver now because it's not that obvious, but at that moment in time, to me, these mining stocks were so ridiculously cheap that I couldn't see putting any money into physical gold when you could just buy these miners. I just did not see the downside risk, and I thought there was huge upside potential. Now we've realized some of that upside potential, but I think in the scheme of things, these stocks are still very cheap. If you look at the PEs of the big gold companies, they're very low compared to historic averages, compared to the market multiples. The investors are not in. I mean, they've still had net liquidations all year out of GDX and GDXJ, these gold mining ETFs. Nobody talks about these stocks. Nobody owns these stocks. Yeah. Newmont Mining is the best performing stock in the S&P 500, yet it's probably the stock that's least owned in the S&P 500. They're going to make nothing but money for years to come. They are producing a product that everybody needs, whether they realize it or not. I mean, the central banks are huge committed buyers, right? They're not going to stop buying gold because they're not going to stop divesting of dollars. And they keep earning dollars, right? Because we're hemorrhaging dollars due to our trade deficit. So not only do they have to get rid of the dollars they own, they have to get rid of the dollars that they keep getting. And so they're going to keep buying gold. And as the price of gold rises, it's just going to suck more central banks into it, because the central banks that aren't buying gold are falling behind the ones that are. And gold is becoming increasingly more important as a reserve asset, not just because central banks are buying more of it, but because the price of what they own keeps going up. And that means that the value of their gold as a percentage of total reserves keeps going up. And so, there's going to be a FOMO in central banks to get into gold. And they're just, they're price agnostic. I mean, they're not going to stop buying because the price goes up because they're just trying to get rid of their dollars before the price goes down. But at some point, the investing public is going to join this party. I mean, I think to an extent, some money is already coming in, and that's why the gold stocks have had the move that they had. But this is just the tip of a huge iceberg that we've seen. And so far, the buyers have been patient and they've been buying on the pullbacks, and there hasn't been any crazy up days. There's no real euphoria, and I still see sharp corrections like what we're having today. Gold doesn't even go down, right?
Yeah.
And all of a sudden these stocks are down 3 or 4% just because people are afraid. Oh no, this is it. But the minute gold doesn't go down and goes back up, then the buyers come rushing in. The coast is clear. But we're going to get into a stage maybe next year, with gold well north of 4,000, maybe 5,000. Maybe the gold stocks double again from here. But at some point, they're going to get on the radar of the average portfolio manager, and they're going to start buying.
Peter highlights that smaller gold companies with proven reserves but no production yet offer strong value, as larger producers flush with cash may buy them out rather than fund risky exploration. Gold is up 30 to 40% year to date, with miners outperforming but still undervalued, leaving room for further gains, M&A, and institutional inflows if prices hit $4,000 to $5,000. Central banks remain steady buyers, reinforcing long-term demand. Juniors with proven reserves but no output look attractive as takeover targets for cash-rich majors. Silver faces structural deficits from industrial use and ETFs, making it highly sensitive to new demand. $44 to $50 is the next target, with a possible rapid surge to $100 in a blow-off rally. Peter predicts if silver breaks above $50 while gold hits $4,000, it could quickly surge toward $100, unleashing pent-up demand, since silver is still below its 1980 high while gold has far surpassed its own. Let's review the interview.
There's a lot of smaller companies that aren't as speculative as you think. I mean, if you're talking about a pure exploration type company, because you don't know what they're going to find. Maybe they find nothing. But there are a lot of very small companies that have proven reserves that they just haven't raised the capital to dig up yet, right? They're at the earlier stage. You're not at the exploration stage. Although they may be exploring for more, but they have provable assets, and they just haven't developed them. So they're not, in production. They're not generating any income. And I think there's some incredible value there because I think these companies are going to get bought up. I mean, it'll be a much friendlier environment to raise capital in the future, and they will be able to raise capital to build out these projects. But I don't think they'll have to, because I think the bigger companies that really have not been investing much in exploration and development, they've just been paying down debt and now they're buying back stock. I think they're just going to have so much cash that they're generating. They're going to have to do stuff with it. And I think it's going to be cheaper to buy out other companies than spend money on exploration and development. I mean, because you roll the dice on exploration, you don't even know what you're going to find.
True.
Why do that when you could just buy up these companies and get their whole book of business, right, on the cheap? So I look, there's just going to be so much money made, I think, in the consolidation of this industry, which I think is going to happen before there's any really major increase in exploration and, of new projects, which is another reason, the price is going to keep going up.
Yeah.
Because there's not going to be, it's not like when gold is $5,000 an ounce, there's suddenly going to be all this extra gold that's being mined. It's not going to be there. Yeah, there may be some more marginal supply. Maybe Americans will start selling off their jewelry at $5,000 gold, to pay the grocery bill, but that's not going to make much of a difference in the scheme of things. And so there's not going to be a lot of new production. And, one of the sources of supply used to be central banks selling. Central banks are not selling. Again, they're buying, and they're going to keep buying, especially these emerging market BRIC nations. They still have, very small percentages of total reserves in gold, even though they've been buying. They have a lot more to buy.
Yeah.
It's just that the major central banks, like, in Western Europe, United States, where we still have a lot of gold, but we haven't been buying, right? The United States hasn't bought any gold.
No.
I mean, we're thinking about buying Bitcoin. That's how dumb we are. There isn't a lot of silver out there relative to the demand that I see for it in industry, but silver is just cheap, and it's cheap relative to gold, and that's the best barometer of whether something is cheap or not, is look at it priced in gold, and you can still get a lot of silver for an ounce of gold. And even at $50 silver and $4,000 gold, that's still 80 to 1.
Yeah.
That's still pretty cheap.
Yeah.
If silver hits 50 when gold's at 4,000. And I think that once silver gets above 50, I think it's going to take off. I think the move from 50 to 100 will be relatively quick. I mean, it'll be a lot quicker than the move from 30 to 50. It may even be quicker than the move from 40 to 50. But I think it's going to unleash a lot of pent-up demand. I mean, why shouldn't silver be double its 2000 or 1980 high? I mean, gold's 1980 high was 850. And we're quadruple that. So, I mean, and silver is still below its 1980 high. And so, there's not that many things that you could find that are cheaper than they were in 1980. Silver's one of them. I think it's very cheap. And other precious metals are cheap too. Look at platinum. I mean, compared to the price of gold, and platinum has already had a big move this year, but it's still pretty cheap. So I think we're finally starting to see some of the other precious metals moving, but silver has always had a stronger monetary correlation with.
Would central bank purchases result in a permanent floor on the price of gold and silver? Before the next step higher, will institutional investors finally see the benefits of mining stocks? If you enjoyed the content, please like this video, subscribe to the channel, and press the bell icon for timely updates. We appreciate your support, and thank you for being with us.